Thanks for tuning in to another episode of Around the Coin. Today's conversation is with Edul Patel, the CEO and co-founder of Mudrex. Mudrex has raised about $7 million, making it easier, faster, cheaper for everyone to trade into crypto. Primarily focused on the Indian market, where Edul is born and raised. They've seen tremendous traction. YC and Y Combinator has invested into the company, and they have a solid team. We talked about the global expansion plans. We talked about industry trends that he's seeing, products pipelines for their business, but more so on the Indian scene, what the climate is like and what he can give us for what the predictions are for the future going forward. Hope you enjoy this conversation. Here is Edul Patel. All right, Edul. Thanks for hopping on today. I'm excited to chat with you. You're running a really interesting project based in India and Bangalore. You raise money from YC, roughly 7 million in that ballpark, building a crypto exchange. Tell me more. Tell me more about what specifically you guys are doing and how things are going so far.
Oh, absolutely. So at Mudrex, what we're trying to do is we're building a crypto investing platform as such. It's not necessarily a crypto exchange in the sense that we think that for the vast majority of users who are now joining crypto or have been coming into crypto over the last year or so are basically retail investors, the average retail investors. They don't necessarily have the time, energy, bandwidth, knowledge, information, and so on and so forth to make the right trading decisions, right? And this is not the first time it's happening in an asset class. This is exactly what we saw was happening in the 60s and 70s in the equities market as such. And to help the average retail investor, there were index funds and mutual funds and so on and so forth, products like those that were created. So at Mudrex, what we're trying to do is we are trying to create simple, easy to understand investment products that help the average retail investor invest and make long-term wealth in crypto. That's kind of the goal of what we are doing. Our flagship product is this product called as coin sets, where the idea is that there are different themes inside of crypto, and you don't necessarily need to know which coin is doing best inside of that theme. What you can do is that if you're, let's say, generally bullish about crypto, you can bet on or invest in the crypto blue chip coin set, which is the top tokens inside of crypto. And let's say if you're bullish about NFT, then you invest in the NFT coin set. If you're bullish on Solana ecosystem, you invest in the Solana coin set and so on and so forth. At Mudrex, what we do is on the back end, we kind of sort of manage that coin set by making sure that the coins are rebalanced periodically and the right coins get added and removed from time to time. So from your perspective, it's a one-time setup, one-time investment, and everything post that just happens automatically. Just exactly how you would expect to happen in, let's say, an index fund or a mutual fund as such. So that's the idea. The idea is that we want to make investing easy and access easy for the vast majority of people who are coming into crypto now. And the way to do it is by simplifying products, and the products that we're building are similar to, equity mutual funds, index mutual funds, and so on and so forth, but for crypto.
And is this similar to Wealthfront in the sense that it's automated back-end rebalancing versus, you mentioned mutual funds, which typically I associate a mutual fund with there's a human being who's making a decision on when to buy, what to buy, right? And you're paying that person a fee, as opposed to an ETF, which is a bundle of equities. Is it more the latter?
Yes, it is more the latter. The products that we have are actually built along the lines of an ETF. Just like how in an ETF, there is just a set of rules that the ETF fund manager, let's say, follows to figure out which coins go or which stocks go from which to which. We actually have a very similar set of rules that we've set up for each and every coin set that we follow. And that exactly does what you said, right? It keeps the fees low, but at the same time, it makes sure that the human biases are out and you are able to create long-term consistent wealth. So there is expertise in creating the rules. There is expertise in creating the ETF as such. And then the infrastructure to make sure that all of that gets followed and executed correctly.
What is the expertise in creating the ETF? Is that determining the percentage of Bitcoin versus Ethereum versus other things? And how would you think about that?
Yeah, so I think it's the expertise over there comes in setting up the rules that you can define for this. B, figuring out proper rebalancing periods, and see at the end of the day, it's still crypto, right? So even though you might set up rules, there might be random crappy tokens that will come in and kind of sort of make things biased. So there needs to be some human oversight to make sure that there is some kind of a whitelist and some kind of a blacklist as such of things that you do include or don't include in the setup. And that's also where the oversight comes in. So there is a whitelist, blacklist in terms of an asset, and there is rules that get set up before any kind of sort of investing happens on behalf of the user.
So who
And
makes that whitelist, blacklist?
Yes. So all of that is done in-house at Mudrex. We've got a team of really rockstar quant devs who are managing all of this setup. And across us, we've got expertise in building all of this out. We've got folks coming in from different parts of the ecosystem, experts coming in from traditional markets. So let's say folks who worked at Barclays, who worked at D-Shaw, who worked at Goldman, etc., as well as people who worked at new age crypto companies, like for example, Seva, which is one of the world's largest banks and coming in from there and managed millions and millions of dollars in crypto in the past.
Interesting.
So I think
And
setting up these coins is kind of the first part where the expertise is. But people really underestimate the infrastructure required to actually execute things in near real time, offering the right prices and so on and so forth as well. And I think that's where is the second major expertise. In case of ETFs, you've got large public markets where at the end of the day, orders get placed and there is something called as a tracking error in tracking ETFs and so on and so forth. When you invest in a Mudrex coins and all of that goes away. And you just try and make sure that you have the best price available and these orders get executed.
And how did you decide what the rebalancing frequency should be? So
I think we've done lots of research over the last few years on this. And it turns out that for crypto across the various baskets that we have, monthly seems to be the best kind of setup that balances risk reward versus fees, both of them together. So we do a monthly rebalancing inside of Mudrex.
And what are the different bundles now? Like how do you think of, do you put them in risk classes or do you put them in different asset groupings or equities groupings where you have like mainstay, like 80% Bitcoin, 20% Ethereum, and then you have like, talk to me about the different bundle strategies.
Correct. So our different coin sets are today grouped by categorization. So themes. So for example, there is a coin set that is based on Solana, which has the top token is like the Solana ecosystem. Similarly, there is a coin set that's based on a category like NFTs. So all of the best NFT projects out there, we've created like a rule based on top of that. And then there is a coin set that's like a generic mass market coin set, which is called as crypto blue chip, which is across all tokens in crypto. Apart from that, we also have some specialized coin sets. So for example, there is a momentum equivalent coin set that says that we will pick those tokens that grew the most last month. And then there are newly listed as well as a category inside of that. So tokens that are newly listed on an exchange last month and so on and so forth.
Okay. Gotcha. And then do you see this growing in a certain way or like, how do you see the evolution? Is it going to be trial and error? See what works?
Oh, so absolutely. So the idea is that you don't need like a bazillion themes, right? Like the entire point of creating these structured themes is so that these are ideas that users can invest in. And there is no point in creating hundreds of such ideas. So after lots of working with our users closely, what we've realized is that about 20, 30 such different ideas are more than enough. That gives users a wide variety, but at the same time, the ability to pick and choose in a particular direction or a particular theme that they believe in so that they can invest. And what we're seeing really, Mike, is that the benefit of these products is that the entire overhead of decision making as to when do I buy, when do I sell, when do I enter, when do I exit, which is the new next hot coin that I should put my money in, all of that just goes away. And what you're trying to do is you're trying to create this long-term wealth using crypto, right? So one of the main learning that we had over the last year and a half is that a majority of users that came in just said that they wanted to create or wanted to invest for the longer run, wanted to make money in the longer run, and they were not necessarily looking for the next 100x token, and that's the difference. A vast majority of crypto products today are more focused on the gambling effectively side,
Yeah.
right? Where the sales pitch is come buy this new next hot token and become a millionaire overnight. At Mudrex, we stay away from those kind of communications because we know that that's not the right way to create long-term wealth. The goal is that crypto as an asset class is growing. It's an industry that's growing, that's changing how the world works. And as it grows, if you want to create long-term generational wealth, you should follow some systems and rules. And we've created products that help you follow systems and rules. And these systems and rules are tested since the last 60, 70, 80 odd years in the equities markets. That's the basic premise, that index investing is the best form of investing to create long-term wealth. And how do we get index style investing to crypto is what we're trying to solve with CoinSets at Mudrex.
And what's your favorite bundle? Where would you be? Where are you in this? Are you like 80% Bitcoin? Like, what's the breakdown?
Oh yeah, so I am a crypto maximalist. So broadly, I am investing a vast majority in our crypto blue chip coin set, which generally covers the broader trends. But then I also have certain specific niches inside of crypto that I really like. So for example, the DeFi, we have a DeFi concept that tracks the top DeFi projects. And DeFi is like a subsection inside of crypto that I'm really passionate about. And I think that's where a lot of the early innovation in crypto will come in. So that's the theme that I am deeply invested in. And the same is also true for another theme called as smart contract platforms. I think that there is a lot of work that's happening on layer ones, layer twos, and layer threes. And there are a lot of these layer ones, layer twos, layer threes that are being built out, like Ethereum, Cardano, Solana, and so on and so forth. So that's the other coin set that I am invested in, apart from, the mass market crypto blue chip.
And do you see, I'm curious what your thoughts on the DeFi token. So I think of the DeFi tokens as a utility token. You mentioned you're interested in them as an investment vehicle. What's your thoughts on the potential rise in value of DeFi tokens? Why would they go up? I assume just more people using them, scarcity, price drives up. Is it as simple as that?
Yes, I think so. I am, of course, very interested in the entire idea of DeFi and how we are essentially attempting to rethink the way the financial world works, right? So the underlying philosophical points over there are definitely very interesting. The premise or the premise behind which I am investing is basically that most of these tokens are utility tokens, and as these protocols become more and more and more used, these utility tokens would, as a result, drive up in value. But that's not what all such tokens are. A lot of them are also governance tokens. So a lot of times users want to have a say in the protocol, or would just want to have the pride of owning such a protocol, right? So that's the other reason also why I believe that these will continue to increase in value, and in the longer run, be extremely valuable for me. But that's a personal choice. I really believe in DeFi. I really think that it's going to change the world. So I'm willing to kind of sort of take that long-term view and invest in it.
So what would you put out as a percentage of what you would invest into crypto? Percentage in DeFi would be what?
Yes, I think about specifically about 30 to 40% of my overall stack might be set up there. About 50 to 60 would be in like the broader market.
And how do you make sense of Bitcoin specifically? Do you have any specific understanding of how you view the Bitcoin's mid to long-term value proposition? Maybe as making them.
Yes, I think it's very interesting, right? What we're basically trying to ask is that what is the value that that any token adds? And I think just like how the value of ETH is basically the ability to provide compute world over, the value of Bitcoin is literally just trust. So the more people that believe in Bitcoin, the more valuable it is. So the more people that are available, that believe or trust Bitcoin as an ability or basically a token or a store in which value can be kept, the more valuable it becomes, right? And I think the general pureness with which Bitcoin as a token itself is created makes me long-term bullish on it. So it will go through, of course, its intermediary short-term cycles. But I think that as time is progressing, more and more and more and more people are believing this idea of a digital currency, a digital store of value, and also a store of value that is decentralized, democratized, does not have a single entity controlling it. And I think that I just think that it is definitely something that's worth keeping at least some part of your wealth.
Yeah. Well, yeah. A couple of thoughts on it. I'm curious to get your feedback. So I think there is absolutely true that the more that it's recognized, the more value it is. And there's two types of truths, right? There's truths that are independent of human thought, and then truths that are dependent on human thought. That would be things like the value of Bitcoin, where a country's borders are, who its president it is. All those things are only true because we agree that they're true. And I think of, if I think of gold is actually rooted in physical reality. Unlike, there can only, we have a limited number of elements on the periodic table, and gold is a specifically unique property because it's mutable. You can melt gold, you can put it together, and people talking about the benefits of gold historically are right? Like it had been for a long time throughout human history, a fantastic way to store wealth independent of governments, because governments have a tendency to issue tender currency, fiat, and just keep printing it, and it becomes inflated, as we know. And then Bitcoin, while it doesn't have the physical representation, it is immutable. It's on chain, and we know exactly how much it is. One risk I see to it that I still am trying to wrap my head around is, if there was just a fork of Bitcoin, is that then somehow a significant threat to the long and midterm sustainability of Bitcoin? Like, I think of you could make this argument for social networks, right? Like when Facebook came around, everyone uses Facebook, and then we can't see a day when somebody moves off the social network. We think of it like a monopoly. Everyone's on, so why would there be another thing? This is the ultimate social network. And then of course it splinters into Snapchat and Instagram and TikTok and blah, 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 blah. I don't know. I mean, yeah, go ahead.
No, so I think that's a great point, right? Because it's questions like this that help us understand more what the actual value of Bitcoin is. The value of Bitcoin is not the code of Bitcoin, or it's not just the code of Bitcoin, right? It's the fact that millions of users are doing the compute to ensure that the Bitcoin network is secure and trustworthy. So the value of Bitcoin is the network and not just the coin itself. And forks come and go. And I think there are already like a bazillion forks of Bitcoin. But the fact is that the fork that has the largest network continues to remain dominant and continues to accrue value. And that's why I said at the start, the reason why I think Bitcoin is really valuable is because of trust. And the trust in Bitcoin is basically this network that's created around Bitcoin, around securing that token, and around securing and making sure that those transactions are verifiable and so on and so forth, right? That's why Bitcoin is really, really valuable. So it's not like just forking Bitcoin will create something that is of equal value. To create that value, we actually need to create the entire network around it, which is the network of miners, the network of entities that accept Bitcoin, the network of people who are willing to put in large sums of money inside of it and agree to the fact that it will be accepted at some point in the future as well.
Do you think there's a potential social pressure or incentive, as we have roughly 9 billion people on the planet, maybe 10, somewhere in that range? I think we're going to cap out around 12, 13 is like the prediction. And many people, a lot actually in India and Southeast Asia, are coming online for the first time. And when you first come online, the first thing you do is not buy Bitcoin, right? It's maybe sign up for Facebook or get an email address or something. Just getting used to it. So there's still, months, years of time for billions more people to come online. And that's happening very quickly. And I think that there's a first mover advantage. Like if you're in Bitcoin early, then you benefit from other people buying in. But then there's also pressure. There's incentive for new people to say, hey, wait, like Bitcoin's pretty expensive. What if there was another competing option? So let me just paint two pictures and then you tell me your feedback. So you have one is, it's like buying into a company, right? Like if you're a seed investor, you win, right? Series A, you win. Series B, you win. All the way to like IPO. The last one in is, who's going to buy after them? There has to be someone to buy after you in order for the stock or the equity or the crypto or whatever to go up. So I think that's one factor. Then the other is compute power. So as compute power decreases in cost, electricity decreases in cost. If we spin up nuclear, solar, wind, effectively approaching, sliding down towards zero cost of energy production, compute power decreases, presumably hardware manufacturing and server power decreases. Now instead of the network being, very, very influential, maybe it's super cheap. Maybe it's like cheap and easy to spin up, 5,000 different node validators on a network. So the idea that the concept of like a network is actually inexpensive to reproduce elsewhere. And I throw that to you to see how, if you then reinterpret add that as a threat to the mid to long term. Like one last thing, I kind of view it as on this point of social networks, there's something that you don't want to be part of the same social network as your parents. And this may be a social dynamic because you're sharing things about you and you don't want your parents to see because it's embarrassing or something. And so there tends to be like a generational jump onto new social networks, Facebook to Instagram, Instagram to Snapchat, Snapchat to TikTok, and so on. And I think that'll probably keep happening. I wonder if it's similar for currency or if it's the exact opposite for currency.
Correct. So I think let's just touch upon a bunch of those things, right? The first part is that, yes, you're right. Bitcoin is a network, but it's not really a social network. It's more of an economic network. And social networks go through generational shifts because the identity of a generation is deeply rooted in their fashion sense, in their behavior, in their memes, and in that generation's cultural upbringing, right? Like we went through the 60s, the 70s, the 80s, the 90s, all of them very, very, very different, right? So social networks are inherently reliant on those intermediary social changes. Economic networks, not so much. Economic networks only go stronger with time as more and more participants join into the network, because as more and more participants join in, the strength of the network increases, it becomes more valuable, it becomes more efficient more often than not, and accepted world over, right? So as more people join in, Bitcoin network actually becomes stronger. So as more people join in, the newer people actually have lesser incentive to try something new out. Because if you're early on the internet and you don't know a lot of things, what's going on, you would rather park your funds or accept payment in a service that is much more widely accepted than something that's new, right? Because it's the economic network that matters more. So that's one part. The second part is about compute, right? And over there, I believe that, of course, as time progresses and compute gets cheaper, the number of people participating to secure that network will continue to go on and continue to become higher and higher and higher. And as a result, the amount of compute that Bitcoin will go through will become higher. The system is designed as such to adjust compute requirement based on demand and supply. That's inherently a part of how Bitcoin works, right? And I think that will continue to move the needle up and up and up, and that will continue to help make sure that the network is secure. The other thought process is that with things like Lightning Network and so on and so forth that are being built on top of Bitcoin, maybe the requirement of compute per transaction actually goes down significantly. Because now that there are these layer 2s that are being built on Bitcoin that actually settle the transaction much faster at much lower transaction level compute cost, but the higher overall compute secures the network more. So I don't think Bitcoin is going away anytime soon.
Yeah, I like that answer. I'm curious to ask you about YC. So you're based in Bangalore. The team, I imagine, is distributed, or is it all located in Bangalore?
Yeah, so we're a distributed team. The vast majority of our folks are in India. We're actually a Delaware C Corp, like the company is HQ'd in the US. And we've got a bunch of subsidiaries around the world to ensure that we're regulatorily compliant wherever we operate.
And so how did you structure this? Tell me the details of this. Like did you move to the US? Did you go through YC's program? How did you get connected with them? How did you structure how did you think about structuring the business?
Yeah, so we got into YC in winter 2019. So about 3.5 years ago now. spent the entire YC batch in SF building the product out, getting a lot of feedback, getting picked up.
Did you guys just apply through the main application process,
Yeah,
or any?
we did just apply through the main application process. At that point in time, YC used to, in our batch, there were like 105 companies that got into YC. 3 of them were doing crypto, 8 of them were from India. And we were the ones who were also accepted, participating in that YC batch. And of course, loved the experience, right? Like YC is always great in terms of aligning values of what it takes to build a long-term wealth creation entity as such. And then that's what I think YC helped us a lot. If we go back and talk about our team, we are a team of 4 founders. All of us are second-time entrepreneurs. And for us, all the basic stuff was actually already well covered for. But just going through the YC experience reinforced a lot of the things that we learned in our first venture that we did wrong. And we just wanted to make sure that we did all of those things right. So focusing on the long term, focusing on creating genuine user value, talking to your users, understanding their problems have helped us throughout in our journey till now.
And I imagine
YC definitely was incredible.
Okay, so what was the application process? What do you think made your project stand out?
Because I think the application process is basically submitting a filled-up questionnaire, doing a video, then an in-person conversation, and then of course like a final interview round, right? I definitely think what made us, what I believe what made us stand out was the fact that as a team, we clearly knew the problem that we were working on. And there was actually really high passion, really high kind of motivation to solve the problem that we were working on in a very, very fast moving technology space, right? So I think it's a bunch of those things. It's a bunch of those things that got together to make sure that we got through.
Gotcha.
It's a passion that the team had, the large market and the large problem, and kind of the intent to just deeply focus and iteratively solve it through a course of time.
And did they fly you out there for an in-person interview in 2019, just pre-pandemic? So
yes, you did.
You guys were the last.
Okay. Pandemic.
So they buy your tickets, fly you guys out, interview, you fly home, then they say, hey, you're in, and then you come back out again for 3 months. Is that right?
Correct. Yes, that's how it was. So we actually, they flew us there twice. The first time they flew us for the interview, and then the second time we, of course, went there to spend the 3 months in the YC course itself. And I think just being there is way, way, way more valuable than doing things remote. I have spoken to a lot of companies who are doing the entire YC course remote. Of course, that helps. It reinforces a lot of things, but just being there physically, the level of energy and the level of enthusiasm and just, in person speaking to all your, group companies, understanding what are they doing well, what are they not doing well, is just phenomenal. We've made a bunch of friends that I think are now friends for life.
That's awesome. That's awesome. Interesting. Any particular lessons that you learned from other projects or other people throughout that experience?
Yeah, so I think I am actually learning more as time progresses than we did while we were there, right? And the one particular lesson that has just clearly been visible is that what I've seen is that teams that have been just persistently trying to solve a problem eventually get there and eventually become incredibly valuable. And I think not enough people pay attention to this. A lot of people say that you want to do smart work, or you want to do things at speed and so on and so forth, but or you want to have a kick-ass rockstar sales team or a kick-ass rockstar tech team, so on and so forth. Like, of course, all of those things help. But I think what I realized over time is that the things that are not negotiable is persistence and, just that constant application at the problem, just going at it one after the other, and doing at it in a way where you're able to make business sense, where you're able to solve your users' problems and understand their value. And I think these are things that you only learn in the longer run, right? Like while you're going through a 3-month kind of boot camp, these are all just good things to hear. But over the course of 3 years, that's when you actually realize what persistence means and what hard work means, and just looking at your batchmates and also looking at your own journey, seeing how things have progressed across the board, you're able to kind of, in the longer run, filter out the signal from the noise as much. so to speak.
Interesting. I like that. That's a really articulate, good way of describing what you get out of the experience. And what's your general take on first, I want to ask you, I didn't quite ask you directly, but where is the company now in terms of either revenue, users, however you measure KPIs?
Yeah. So CoinTats is today the world's largest crypto investing platform. We've got over 300,000 investors investing in these different baskets. Our largest basket, crypto blue chip, has close to 150,000 investors who've put in their own money. And this is not one-time investment. We see people doing recurring investments in these CoinTats. So it's basically actually working to create long-term intent or long-term value for our users. So from a scale perspective, we've scaled immensely. A vast majority of our users today are in India, but we are scaling up rapidly. We've just we're just in the last leg of getting our European license. So we will be launching in Europe over the course of this quarter, and hopefully coming to US pretty soon.
And how, there's two things I kind of want to ask you, but one can people just go on the site and see what the baskets are composed of? Or is there some proprietary nature to which you try to keep that as a valuable part of the business?
No, so I think trust and transparency is really critical to the business in which we are. And as I said, you can just download our app. You can look at each basket. We have a very detailed description that also elaborates our methodology in choosing the tokens. And we also show the constituents at that point in time and the percentages across those constituents and so on and so forth. Because I think what's valuable to understand is that the idea of index investing is not just investing one time in a given set of constituents. It's the ability to rebalance, to hold that token set again and again and again for the longer run, that coin set again and again and again for the longer run, and making it just very, very easy for someone to invest in. And I believe that all of that is where the actual value, the actual proprietariness of our product is, making the entire product experience seamless. That's what's more valuable, not just the basket itself.
Gotcha. And how are you structuring the fees on the business?
Yes. So as such, today, we don't charge any service fee. There is anyways, most ETFs are very low cost products. So there is no service fee, but there is a transaction fee that users need to pay whenever a transaction happens. And that's how we monetize. Apart from that, whenever users go from fiat to crypto, so from your own local currency to crypto and from crypto to your local currency back, Mudrex also facilitates that. And that's the other part of the fee that we monetize. In the near future, we actually want to add more services on top of CoinSites, and services which could only be enabled in crypto, right? So an interesting idea that we are working on today is that, the reality is that, let's say if you invested in an ETF, you could, in theory, purchase a bunch of options to offset your downside on an ETF, right? Now, doing this in practice in the equities world is immensely complicated. And for an average user, getting access to those kind of services becomes really, really difficult. And the reality is that the super rich actually do have access to these products, right? Like folks who are investing millions in and equity do get advised by their investment bankers to buy options to protect their downside. And that's like a very obvious thing to do, right? What we think is that we can enable these services that actually meaningfully help the user create long-term value. So the idea is to, let's say, sell an insurance equivalent setup where you pay a small premium to buy, to essentially limit your downside. And the way Mudrex works is that it goes and correspondingly buys a structured set of options to prevent your downside at that point. So in the near future, we plan to add more and more such offerings that for the user are simple. At the end of the day, for the user, they just do the job of preventing downside at the cost of or at the price of a given fee. But in the backend, we structure it in a way that it executes seamlessly from a financial product perspective. And these are things that are only possible in crypto, simply because crypto is so open, accessible, and available to users worldwide.
And what backend tools are you guys using? Are you using like a custody provider? People are leaving their crypto with you, I would imagine. So you're using what tools make your business possible?
Yes. So I think it took us about 2.5, 3 years to build out our entire infrastructure stack in a way that it's secure, reliable, and just works seamlessly. So it's actually difficult to elaborate everything quickly. But the essence is that yes, users do leave custody with us. We are all that custody is stored really securely. And then when orders need to get executed, some part of funds move away from that custody, orders get placed, orders get settled, and it gets all stored custodially back again in a cold wallet. We are in last stage conversations to also get in like an insurance layer on top of that custody so that users' funds are actually really, really secure. And even in the last edge case of some security breach and so on and so forth happening, those funds don't go away as such as well.
So why not use a custody provider like BitGo or Coinbase, I think, as one or others?
Yes. So the custody is actually stored with custody providers who do provide such custody services to us. But it depends on what amount of custody gets stored over there, what amount does not, because not all funds never get stored with a custody provider. You have a cold wallet, a hot wallet, a warm wallet, and that kind of a system. So the custody orchestration happens with us, but at the end of the day, we do use some service providers to store custody at the end for our users.
Gotcha. And interesting. It's a good way to structure it. What else? What else do you find most compelling about the market? Do you have any opinions about the direction we're going? We're kind of in a slump of, which is probably a good thing, but do you have any areas where you're particularly more excited about than you think other people are, or less so than other people are?
Yeah, absolutely. So I think two parts, and I would rather not talk about price, but talk about the market in general. And two parts over there. The first part is it stands on acceptance, right? So we've been in crypto for the last 5 years or now, and in an industry that's 10 years long, 5 years is basically eons. And over the last 5 years, what we've now seen is that from 2018 to 2021, a vast majority of users that came into crypto were just traders. And we've gone from maybe 5-6 million really active traders to 10-12 million really active traders in 2021, right? And what's happened is that now that trader curve basically started to plateau in 2021 because whoever wanted to trade crypto actively was already into crypto. But from 2021, what we started to see was that this entire new wave of users started coming in, which were basically the average retail investors, right? Who wanted to create wealth, who came into crypto in 2017, got shooed away because of all the of all the chaos and hysteria that happened, and then over time just saw the industry grow again and again and again, and their beliefs being reinforced by large investors and so on and so forth, and are now here and now genuinely believe that okay, this is going to be a part of their future. This is not something that's going to go away. So 2021 to now, we can sort of seen about 15-20 million retail investors come in. So we went from almost 10 million traders and maybe like a couple of million retail investors to 12 million traders and now 15-16 million retail investors. So the entire broader market kind of structure has radically changed. It's gone from active traders to passive investors. And all the products that are popular today are built out for traders. And no one is talking about what's being built for retail investors. And that's what we are seeing more and more being built now as time progresses, right? And some early stage variants of those products were the kind of things that BlockFi was building or Celsius was building or Clio was building, right? Simple tools that help you store your crypto, help you earn on top, help you create wealth. All of that didn't pan out well, but those were the first generation products. That's how I kind of look at them. And as more and more retail is coming in, more and more products like what we are building at Mudrex will get built out over the next couple of years or so. And I'm really excited about that because it's a very large blue ocean kind of sort of market. What products will work, what will not is not really clear. And all of this will evolve and entities and companies that end up capturing or winning this market will be incredibly valuable in the longer run. So one part that really excites me is how this market is completely shifting and how that shift has just, been accelerated over the last couple of years or so. And the other thing is the phenomenal pace at which the underlying technology is improving. Like if you go back and look at again over the last 4 years, all the ICOs, IDOs and so on and so forth that were kind of sort of fake promises in 2018, 2019 started to actually show some real work happening in 2020, 2021. And that's kind of sort of the gradual pace at which technology evolves, right? It does take a couple of years of really hard work for promises to come at least somewhat closer to reality. And the rate at which those things have moved is just incredible. And over the next few years, I believe that technological pace at which newer and newer products will get developed on crypto, on blockchain is just exploding. And it's exploding with a wide variety of core new layer ones coming up, like Solana, layer twos coming up, like Starkware, like Polygon, and so on and so forth. And then just a wide variety of kind of applications that are being built on top of these products. So the use cases, the usability, the acceptance, all of that is kind of sort of exploding in parallel. So really excited about the technology as well, because what we have today is really a new way of transferring, sharing, and storing value in the age of the internet. And it's a completely new paradigm. So completely new use cases, completely new ways in which we interact with people and completely new ways in which we transfer and pay for services and goods over the internet are going to come over the next few years, right? So really excited about that. So I think the market and the technology are the other two things that I'm really excited about. Price is just a consequence of demand, supply, hyper hysteria.
Yeah.
So would rather not comment on that.
Yeah. Very ephemeral. I agree with you largely. What's the biggest, if there's one singular large risk to the, call it midterm, I think long-term, it's hard to see how it doesn't become, how the core base technology of blockchain conceptually just doesn't become a massively utilized worldwide technology. But in the short to midterm, what do you think is the single most risky or thing to pay attention to, threat to the growth of Bitcoin and other cryptos projects?
Correct. So I think I think the part that is that makes crypto most susceptible is literally just positioning and how people talk about it, right? And I think the key part that needs to change, and that we're starting to see change, is changing the narrative on changing the conversations from price movements, 100x growth, 20x growth, 30x growth in period of over day, this, gambling, lottery equivalent kind of conversations around crypto, to actually technology conversations around crypto, finance conversations around crypto, investing conversations around crypto. It's the narrative, I think, that's more important. And I think that is the one single critical risk that will prevent crypto from just literally exploding. The social acceptance needs to come in along with the technology and use case growth as well, right? So no doubt blockchain will be there, but whether it's socially acceptable to the world or not, whether the use cases will become easy enough or not, whether the UI and the UX of crypto will become simpler or not, those are the critical risks. So the narrative and how people end up using it on a day-to-day basis, that I think is the risk that's literally today stopping crypto from exploding.
Bigger than regulation, bigger than government intervention?
No, so I think the way I look at government intervention and regulation is that, see, regulators from their side are actually just trying to do the job of protecting the average investor. If the reasons why harsh regulations come in is because the use cases are actually trying to scam people of their money. Yeah. That's reality, right?
Yeah.
So as use cases develop to useful use cases, regulations evolve to be adaptive.
Yeah.
So I think regulations will move at their own pace, and typically regulations always follow rather than lead, right? So it's never going to be a breaker. It's never going to be like an existential risk. It will slow things down, but it's not going to be an existential risk. So, and I think the way I think of it is that if the narrative improves, if the use cases improve, if people start accepting crypto for a vast majority of wider acceptable things rather than just kind of thinking of it as a way to gamble or bet or make 10x returns, regulations follow suit, and the narrative changes, and why people use crypto changes.
I think I mostly agree. I disagree in part that I think you're right that the regulation is incentivized to protect the average retail investor. I think that's right. But the caveat is unless the technology threatens the governing body itself. So then what matters to a governing body is the people that it's enacted to protect. But what matters more than that is protecting itself. So if something threatens the actual regulatory body or the government itself, then I think there's like a prioritization that naturally happens, where it's like deprioritize the actual governing mechanism itself and prioritize instituting regulations that protect itself. So what governments want more than anything is to preserve their existence. And so I view it as like, it's amazing to me, this whole drama, because it very much threatens it doesn't threaten the existence of central organization. Everyone needs their garbage picked up. You need running water, you need electricity, and those things need to be provided centrally, like roads, everything else. But then there's also printing of money, which is similar to the separation of church and state. Prior to that being a core construct in modern society, the church and the state were one being. It was very much intertwined. And so to make that incision and separate those was a big deal. Wars were fought over it, revolutions were fought over it. And I tend to think that the separation of state and money is going to be decoupled. And I don't know how peaceful or how simple that decoupling will be. So that's that.
So I think by no means will it be simple.
Yeah.
And entities where power gets concentrated tend to protect that power much more often and much more strongly
China
than not. It's not really China,
right?
I would say countries as such. But the point just being that basically at the end of the day, these governing bodies are institutions run by individuals, and it's the intent of the individuals that needs to change first before the entities start changing. And at some point in time, yes, there needs to be a struggle period in between. Now, in a lot of cases, those struggles are peaceful and gradual, but in other cases, those struggles are violent and not right. So those are some choices that we will have to make as time progresses.
Right.
But I think that is a definite eventuality, and that does need to happen primarily because crypto in a lot of cases and a lot of means just makes things more efficient. Like the technology makes it just easier and simpler to transact over the internet, share value, transfer value, and do all of that over the internet. So if you're not a part of it, you are doing something that's fundamentally inefficient. And if you're doing fundamentally something that's inefficient, it is going to be more expensive over time.
Yeah.
And at some point, the costs just outweigh the benefits, right?
Yeah.
How that transition happens is up to your and my guessing. The transition should happen.
I do think that China has taken a step in declaring what they view the transition as to be, which is say, don't do it. It's like, hey, we don't want crypto to be running wild in society, because they view it as an existential threat to the monetary control that the governing body has. Rightfully so.
Correct.
Like it does. Like when I use Bitcoin, I'm not using the dollar. And so the more you can get out of the dollar, the more the government's, the Federal Reserve, the whole economic engine of the US government is disempowered. So I think that's
correct.
I just question how that's going to go down. Because that's like when the most powerful entity on earth is effectively losing power, and they see how they're losing power, and they have the ability to influence that loss of power. Then it's like you kind of have to ask, you say, okay, well, the purpose of government is to benefit the people, but the government has its own has its own centralized consciousness and self-preservation. And so it's like, it'll be a really interesting social studies example to see how this goes down. But obviously from your perspective, it's like, build valuable shit, make things that are respectable and undeniably useful, so that there's not, so that the chances of politicians being able to create some story about how crypto is destructive decrease. Because the only thing that empowers governments to make overreaching regulation is when people are scared. And people are scared when they get hacked, when they lose money, I mean, effectively like what happened, right? So I'm so curious to see how this Celsius, Luna, Terra, like how this whole thing plays out, because if it just kind of goes by, that's great. But we'll see.
Yeah, exactly.
Yeah. Last thing, where are you online? Are you personally tweeting? Are you personally writing? And then tell me who influences you. Is there a book that you read? People, where have you learned the most?
Yeah, so of course I'm there on Twitter, there on LinkedIn. A lot of the things that I write do get posted on LinkedIn. There are a bunch of blogs that I continue to write for our users on like a very, very regular basis. So that comes out via emails to all our users at periodic intervals. And I think I am for sure a fairly inclined book reader. I do spend reading a lot of books all the time. And there are a bunch of books that have really influenced me in the way I think. I think one of my favorite books is Thinking Fast and Slow by Dan Kahneman. And that book has fundamentally changed my outlook as to how the world works. But there are a bunch of others as well, right? For example, from like a people management and how to organize things perspective, there is this really great book called as High Output Management by Andy Grove. That's excellent. And then there is this book called as Principles that I read a few years ago by Dalio, and that's phenomenal.
Awesome. Well, thanks so much, Edul. I appreciate you coming on today. This has been fun, and congrats on all the progress.
Yeah, same here. Love having this conversation. Thanks a lot.
Cheers.